Hi friends, welcome to my channel Cora Trade. Today I will discuss about one of the important long-term investment stock, that is Oil and Natural Gas Corporation ONGC. Investors with 2 to 3 years investment horizon can consider accumulating the stock of India's largest oil and gas producer ONGC. I believe the new gas pricing guidelines announced by government to be a positive for the company. Besides, the additional crude and gas output from new fields, particularly its new well at Krishna Godavari Basin, should help the company sustain healthy growth over the next 2 years. At the current price, the stock trading 5 times its total trailing 12-month earnings and about 0.7 times its book value. The stock at the current price offers an impressive dividend yield of 6.75%. I believe ONGC to be a good medium-term investment opportunity for 3 reasons. First reason, ONGC commands leadership position in India's oil and gas exploration industry, accounting for 68% of the production and for over 2/3 of the country's total gas production. Similarly, without including joint ventures, it accounts for 66% of the country's crude oil produced as of April 2022 to February 2023. Production data released by Petroleum Planning and Analysis Cell. ONGC production was at 16.88 million tons as against total production of 25.49 million tons as of February 2023. The company also has the largest reserves of oil and gas in the country. As of April 2023, it has proven and probable reserves of 1221.48 million metric tons of oil and gas. In financial year 2022, the company produced a total of 55.72 million metric tons. The current reserves are over 22 times its financial year 2022 production. The company, through its subsidiary ONGC Videsh, has 32 projects ongoing in 15 countries and is looking to increase output from overseas assets from 15 million metric tons of oil to 40 million metric tons oil by 2040. The new discovery of Vindhyan Basin in 2022 will drive the long-term growth for ONGC. Second reason, the new pricing guidelines for domestic gas is expected to benefit the company's natural gas business by way of steady revenue and profit growth over the medium term. Under the new policy, the gas realization per MMBTU will be fixed at 10% of the previous month's average basket price of crude for India. Oil fields of ONGC, also called as a nominated fields, will have a floor price of $4 per MMBTU and a cap price of $6.5 per MMBTU. This is a positive for ONGC given that in the last 7 years, natural gas prices have been in the range of $1.9 to $3.7 per MMBTU with an average price of $2.8 per MMBTU. Also, the company's gas cost is estimated to be under $2 per MMBTU, and this should help consistent revenue and profit growth for the gas segment. Assuming total production of 22 billion standard cubic meter this year, the incremental revenue and operating profit accumulation for every $0.5 increase per MMBTU due to the new pricing guidelines will be about 3,630 crores. Third reason, the new discoveries such as the Krishna Godavari DWN 98.2 in the Bay of Bengal and the Cluster 8 marginal fields in the western offshore will add to the company's gas production in the beginning of the financial year 2023 to 2024. ONGC is expecting incremental gas production of over 5 billion cubic meter by 2026 from the financial year 2022 production of 20.9 billion cubic meter which is an increase of about 25% over the next 3 years. Interestingly, it will be able to get a 20% premium on the gas price from this field under the new pricing guidelines. ONGC is also implementing the fourth phase of the redevelopment of its 5-decade-old Mumbai high oil and gas fields, which will further increase oil and gas production. It has set aside 31,000 crores for shoring up its energy exploration over the next 2 to 3 years. Besides this, the company is also actively pursuing opportunities in the renewable space. It has signed an MOU with Greenco Private Limited for setting up a 1 million ton green ammonia plant. It forecasts scaling up its non-renewable energy production from the current 204 megawatt to 10 gigawatt by 2030. If you looking into financials, the company's strong balance sheet with a net debt to equity ratio of 0.42 times as of September 2022 lends more comfort, and this has improved marginally from 0.44 times in March 2022. Being a consistent dividend payer, ONGC current dividend yield of 6.75% is attractive given in the volatility market. For the 9-month period ended, the company grew revenue 29%, about 5,20,762 crores. However, the profitability of the company was impacted by the losses in the oil marketing and refining subsidiaries, Hindustan Petroleum Corporation and Mangalore Refinery and Petrochemicals Mrpl, due to which the company reported a 27% decline in net profit. While the operating margin of ONGC 55% for 9 months of financial year 2023, the consolidated profit margin was much lower at 12%. If you consider risks on ONGC business, ONGC holds 54.9% stake in Hpcl and 71.63% in Mrpl. Hpcl performance has been a drag on ONGC profitability over the last 9 months, as the company reported a net loss of 14,696 crores over the April to December 2022 period. Despite skyrocketing crude oil prices and record refining margins, the losses on marketing petrol and diesel, as the government chose to keep prices unchanged, took a toll on Hpcl performance. Now, with the crude oil price in the $80 per barrel levels, any further increase in oil prices and inability to pass it on to consumers can continue to strain Hpcl profitability. That said, easing of inflation over the next few months and moderation in crude oil prices globally will be positive for Hpcl. The windfall tax on crude, which is currently a negative, may be phased out should the crude prices moderate to $70 levels. So these are some risks on ONGC subsidiary Hpcl profitability. Now we look into technical stock price moving of ONGC for the next quarters. From last 10 years, it is consolidated between the price 110 to 150 rupees. Now it is crossed over that 150 rupees and settled at 160 rupees. For medium term investors for 2 to 3 years span, they may invest at the price above 150 rupees if it is sustained above 150 rupees. In 2014, it reached to 200 rupees price. Now we consider that target was 200 rupees if it is sustained above 150 rupees. When it is dips 2 to 3%, long-term investors can accumulate the stock for good returns in next 2 to 3 years. So this is all about ONGC future business growth and technical analysis. If you like my video, please subscribe my channel and thank you.